This is the market update. I'm your host, Bill Noble. If you need a roadmap in crypto, subscribe to this channel. Turn on alerts so you know when we're going live, and make sure you hit the like button early and often. So I have a stealth announcement this morning just to kick it off as I adjust my video. Down in the link below is a prototype for a $15 a month Patreon group that I'm starting. So that's going to have morning alpha, charts, plus video. So if you want to join in on the prototype, it is down there in the link below. Okay, so let's start off with asking the audience if they can hear me because I'm live myself. So we have Mike, forget about it. The Fuzz Crypto. Steve J is here. Welcome. Rugby Performance Lab. Chris. Right. JB. Richard Barry. Let's go. Right. Bobby Jackson. Patriot Caveman. I'm back. Right. More regular stuff coming in Patreon. Okay. Render and Solana on fire. Yes. Altcoins are smoking. The whole world is bearish, which is a perfect opportunity for these altcoins. Okay. Unfortunately, I may be one of those slightly bearish people, right? But there's no doubt that if you've got a core crypto position, you can keep it. You can keep it. Jappy says, you can hear me. Great. Matt wants to look at the Galaxy digital chart. I'm going to write that down right now. Okay. 250 million just deposited into Binance. All right. Douglas thanking me for my work. I appreciate that. And T-Bone makes the stream. Right on. Okay. Let's get started with news. All right. News. Here we go. So, Nigeria's record currency slide continues as the supply of US dollars dry up. So 2 things to garner from this. 1, we hope this never happens in the United States. 2, there's still demand for the dollar, right? I think one of the things that I look at when I look at the crypto market, I go, crypto should be much higher. It really should. I mean, they repriced it for what they think is a pause in rising interest rates. You know, the Fed will be out soon. I don't think what the Fed does matters. We'll talk about that next. Okay. There's still demand for the dollar. Still. Okay. Now, let's talk about the Fed. The happiest guy to be out of the headlines is Jerome Powell. Couldn't be happier, right? They're going to pause and they're going to let the longer term bond market fix the inflation problem. Now, let's talk about the longer term bond market, what's in the legacy press, and how it affects crypto. Generally speaking, the consensus is, and it's all over the legacy press, including the front page of Barron's, which is Wall Street Journal Weekend, that now is a perfect time to buy bonds, which is interesting considering the government is going to issue 1.5 trillion in the matter of like a quarter. So everyone wants to buy long-term bonds. Okay. And that's a little bit scary, honestly. TLT volume is massive. Call options in TLT, which is the long bond futures product in the equity market. Okay. So never trade with the front cover of Barron's. That's kind of my thing. And if you think about what crypto has done, it has repriced itself for unending U.S. fiscal irresponsibility. Now, if crypto has repriced itself because they think interest rates can only go down, there may be a rude awakening and a dip in November, because the theme of the stream is, when can you add to your crypto positions? Right. My vote is, if today Halloween is an up day, take tactical trading profits, take something off the table. Okay. Looking to buy it back throughout the course of the month, particularly at the end of the month. So net, If you got to go to work, here's the stream. Buy it at Thanksgiving, buy it at Christmas. Okay. How big the dips are in between is a function of what goes on in legacy. But what the Fed does no longer matters. It doesn't. You know, like he can say this or say that. He can talk about risks of inflation. He can talk about full-time jobs softening up, which I think is happening, meaning, you know, it's harder to get a full-time job. But, you know, this whole data-driven approach doesn't matter when you look at the theme and the title of the stream, which is war and debt. Those are the data points. It has nothing to do with the Fed. Right now, if he comes out and talks dovish, that's going to give Bitcoin a pop. I kind of doubt it given where inflation is. So that's your Fed preview and your tactical crypto outlook. Okay. Let's take a look at another news article related to governments controlling everything. Joe Rogan's CBDC fear is already here. Credit scores in the United States are already determining your place in society and your access to the financial system. CBDCs have actually turned out to be a bigger nightmare than I ever would have thought. Honestly, that I ever would have thought. And privacy matters. Now, check this out. Apparently, with artificial intelligence, somewhere in the documents of this White House thing, right? In other words, 17 million Americans are waiting in line for food or at food pantries, but we have to have a comprehensive AI bill. As if regulating AI is going to stop the Chinese and everyone else who is just moving forward at a rapid pace. But part of this is about protecting Americans' privacy. If you want to protect your privacy, it's Monero and Zcash, and have these guys stop leaning on crypto. That would be Elizabeth Warren and friends. Okay, but unfortunately for the country, and fortunately for crypto, there doesn't seem to be any limit to the stupidity of the government. The only way that this becomes a problem is if the fiscal irresponsibility creates a contrarian at this point, spiral lower in bond prices and a spiral higher in bond yields. In other words, has the U.S. administration and these people done such a job of wrecking American credibility that something happens in the legacy market? Could be the dollar. That would be great for Bitcoin. Could be bonds, could be stocks. That would be bad for Bitcoin and crypto. So right now we're having a huge altcoin party, and obviously you can carry on. I'm not going to tell anybody to get in the way, although I did get a little gruff on Twitter last night just to get engagement and say, hey, war is on, adjust your positions. Now, let's talk about the elephant in the room, which is the war. Routine cheese. You're never too late. You're never too early. You're right on time. FD White is here. Okay, now let's just try to talk about this. In Patreon, there's like a version of what we're saying here. It's just a little bit more direct and to the point. So let's talk about the nature of fighting between nations. What we're seeing on Twitter, okay, and what you're seeing with civilian casualties looks horrible. And it is horrible, which is why they built things like the UN. Say what you want about the UN, but it was built to try to have peace because of the horrors of war. If you've ever seen the building in New York and you can see how big it is, you know why they built something that big, to try to have peace. Peace is wonderful because war is horrible. Now, when you have something like war, you have a portfolio manager population that have 1, never studied war, 2, never seen war, 3, never seen any events like even 2008 or maybe even 87. No one has seen it. Now, certain speculative assets, as Big Rich notes, are on fire, right? But I suspect that war is not priced into markets at all. I was an intern in 1990 when Saddam invaded Kuwait. and there were all these threats to oil. Now, that was actual fighting in oil regions, but it's pretty clear with the United States, and you track the C-17 flights, we're sending everything we have over there. Because if we can't defend Israel, we don't have any credibility on the geopolitical front. Like, the nation's image could totally collapse if we can't defend Israel and ally. Now, you don't have to like anybody in this conflict, right, on either side. But the credibility of the United States is on the line. And if this escalates, nobody knows how to trade it. Now, Bitcoin is up, right? There's the ETF. There's the expectation that interest rates were going to like stay steady. And what happens is Bitcoin and crypto is always up on Monday and Tuesday because everyone waits for the end of the world over the weekend. And when it doesn't happen, all the shorts cover. Now, that's fine. But what happens if it comes a day, particularly in November and December, that as tensions rise, you do wake up one day and the rally fails? That's why I'm making a suggestion about tactical profits. Because if you have a portfolio manager community that doesn't understand what's going on, okay, there's only two options. One, nothing is going on. There's nothing to worry about, at which case you can carry on. Or two, when something does happen, the shock is going to create such a surprise that you may actually get to buy some of these assets a lot lower, which is why I'm bringing this up. Really, it isn't a question of, selling and getting out. It's a question of adjusting positions so you can take advantage, okay, of whatever happens on the downside, okay? Now, this idea of a wider war, the more hardware that builds up out there, okay, the more likely it is that you get a much bigger conflict. Okay, Israel's prime minister was on last night saying we're in total war mode. And we're staying in total war mode. And the thing that struck me was a quote from the Bible where it said there's a time for peace and a time for war. This is under discussed on crypto Twitter because altcoins are flying. And who knows? Crypto may continue to climb the wall of worry, at which point I would be much happier. What I'm focused on is it's not a bull market until you can buy a dip and make money, right? Straight up is great unless straight up ends badly, meaning there's a dip out of nowhere and people who got in late wind up losing a bunch of money. Really don't want to see that happen at all. Okay, now stress in legacy, pensions, right? Whether it's in the UK or in the US, right? People who think they're going to have a certain lifestyle don't have that lifestyle. Okay, this is worth bringing up because the cracks in the legacy system are underreported. Now, hence the complete repricing of Bitcoin. I can't explain why ETH hasn't followed. Maybe it's because Solana is going to eat ETH's lunch. Okay, that's also possible. Now, a word on Gen Z. Everybody is down on Gen Z. Everyone's like, ha ha, they're going to draft Gen Z. Ha ha ha. Okay, Gen Z may actually be one of the entities, right? May actually be one of the entities that looks at crypto and is like, you know what? As the world falls apart, I'm going to put whatever money I have into crypto. Now, assuming these people have money, but they, the guys that have jobs, they're not going to want to buy Nvidia. And I'm going to go through that chart too. Don't blow off Gen Z. Now, there's a lot of things to make fun of Gen Z about. There was that viral clip of a woman complaining that, if she has to commute to a 9-to-5 job, that, she has no time to do anything else. She needs to work at home. And the level of distress was so great, it triggered mass mockery of the generation. Well, if older people can't live on their pensions and younger people are going to be turned off by legacy, this drives demand for crypto. Now, again, this assumes anybody's got any money to put into the market. But certainly BlackRock, Cathie Wood, and all these other players, they want Bitcoin on their balance sheet. Now, let's talk about Cathie Wood. Cathie Wood is now moving herself into Europe, okay, because I think there's probably too much embarrassment in the United States given what happened with her ARK fund last year. Note that people are trying to get into Europe. I'm sure there's people in Europe that were like, you're crazy. They're trying to get away from the dollar. One of the reasons why I think you can actually take some tactical profits in crypto is because the dollar hasn't fallen out of bed yet. Wow. Good morning early in California. Okay. Gen X is putting boomer money into crypto. Quite possibly. Quite possibly. Cathie Wood is looking to get into Europe. Why? Get away from the dollar. Cathie Wood wants a Bitcoin ETF. Why? Because they want Bitcoin on their balance sheet. They want to get away from the dollar. Now, that's good, but the dollar actually has to go lower. Now, I don't think the dollar index is going to be able to sustain itself above 106 or even at 106, but we do need to start seeing that price action. Now, if the dollar falls out of bed, based on work I did with the smartest person I know, so anybody who stayed with the stream this long gets this nugget. Bitcoin, if it gets above 42K, you can look for massive new highs, okay, and probably the start of the super cycle. Now, if Bitcoin stalls at 36K, there's risk that this thing can go much lower than you think. So take a moment to ponder this. Nobody wanted Bitcoin at 28K. Now Bitcoin's at 36K and everyone's like, I want to buy the dip. So one of two things happen. Either there is no dip or the dip that happens is so severe, people don't want to buy it. Something to consider, right? It's not a bull market until you can buy a dip and make money, right? If there is a dip and people grab it, then you know it's going much higher. And if it winds up above 42, then that literally is the all clear. I know it's the kiss of death in crypto to say, well, I'm not going to buy until I get confirmation. And I don't think anyone's waited to buy. I think people have core long positions. This goes from institutions to individuals. So obviously keep your core long position because you don't want it to take off for a new high and miss it. However, it may make sense to raise capital to try to take advantage of any dip. Right? Bitcoin will be strong at the end of the month. And then you have to ask yourself about all risk assets. We'll take a look at the charts right now. Okay. So that's the news. Okay. Chatty Man is here talking about millennials. Let's put this comment up and read it. Millennials like us are only laughing at Gen Z because we are just as buggered as they are, except we are now old and have bad backs. All our pensions are wrecked. So that is a good segue into the PowerPoint. Okay. Honestly, in PowerPoint, I know I've probably been saying this a lot lately, but I don't know. You got a lot of powerful themes and powerful charts in PowerPoint lately. Okay. Let's start off with XRP. A little contrarian rally and possibly the bigger the base, the higher into space going on in XRP. Perhaps this is the sequel to Chainlink and a possible one coin market. Ripple, as I've discussed and have many people in Legacy have discussed, including like one of the smartest people I know, is that one of the things that held XRP down was Ripple indiscriminately unloading XRP on retail to fund itself. That's why XRP never went up after what the government did. Okay. After the government lost the case. However, if Ripple is done selling, XRP does have room to go up. It does, especially if all the market does, if the correction or the dip is Bitcoin just finds itself in a range, which could also happen, right? I mean, you could just sort of sit here and there could be these little flash dips during October, at which case, you know, your XRPs, your Solanas and stuff like this can carry on. But, you know, XRP to me with the speed and the banking applications, I don't know. It could be a very meaningful breakout. Now, we could have right here, and I've said this before, the one chart market update. I have it written down to go over Galaxy and live TA, so stay tuned for that. But this is the chart of MicroStrategy. This is the Bitcoin ETF. Everyone's like, oh, the Bitcoin ETF. Yes, places will have to buy a ton of Bitcoin, but the only way to buy a ton of Bitcoin without sending it to 100K is to buy the stocks of the companies that own a ton of Bitcoin. Hence the gap move higher in MicroStrategy. There's support at 377. If there is a reason for Bitcoin to have a modest dip or a range, it would be this MicroStrategy chart where it basically, it doesn't really get any more bullish to break out of a diamond and then launch yourself higher at the apex of the diamond. So break out, retest, boom. Okay. And that could be the market update. That could be it. It's all about MicroStrategy price action. And if MicroStrategy is holding, the market is holding. Done. Okay. Now, I don't know if it's that simple with what's going on in Legacy. We're going to go over charts and levels that you can write down on a piece of paper on your desk. Now, total crypto market cap. Okay. Very simple. So what's going on? You have resistance and you're at a hidden pivot target around 1.25 trillion. So it's pretty simple, right? I think if altcoin market cap breaks out, well, then it breaks out. That means Bitcoin's probably going to go up or hold, right? And then some of these altcoins like ETH, XRP, and whatnot can catch up. Okay. Language Trainer is here. Welcome. So, I mean, that's like it. It's like 1.25 trillion. And if there's a dip, you're looking at 377 in MicroStrategy. Now, this can be interpreted two ways. This is Bitcoin dominance. Super Matt, welcome. This is Bitcoin dominance. Had a target of 54. Got the 54. Now what? Okay. I think a correction. You might think a massive pop off in altcoins across the board where Solana and Render lead the pack. I'm not going to argue with you, but I am going to show you charts and Legacy of what happens if you get a failed rally in stocks and bonds. And just a reminder, it's not a bull market until you can buy a dip and make money. If this is a super cycle, and I remember 2007, that was like a super move. There were like 30 and 40% dips on the way up to 20K. So it's not like the market will never dip again. I think that that's out there on crypto Twitter, and that's probably only the case unless you take out 42. But can you buy a dip and make money? Now, this is the most extreme bearish example for Bitcoin. So just to take a moment to counter the groupthink, that's all I'm doing. It's an exercise. You can try the exercise at home or not, right? But I'm in a mood to challenge groupthink. So the groupthink is the super cycle has started. Okay, great. I'm a crypto person. That's awesome. However, on the Bitcoin weekly chart, if you have 1 down, 2 up, 3 down off FTX, and all we've seen here is like a corrective 4 wave led by this emotional move higher. If this emotional move doesn't take out, say, 42, right, then there could be a new low. Now, that's the most extreme bearish example. Now, what I would like you to do as an intellectual exercise is, what would Bitcoin look like at 20 or at 15? What would the world look like? And is that even possible? Now, I could tell you, I could guess the stream is on YouTube for a week. I don't know, but I do know what the world looks like at 15K, if that ever happened, right? So yes, this is crazy, right? But it was crazy last year at this time to tell people that when people like on this red candle, if you had told people that a year from now it was at 34, they would have said you were nuts because they were looking for 10K. Everybody was looking for 10K. So everyone's looking for 10K here and everyone's looking for 40 or 50 here. Just saying. Just saying, literally. Okay, dollar index quarterly as a reminder. The dollar index going back to 1989 has spent no time above 106. The only way out of a debt crisis is a currency devaluation, and that's the market update. Ha ha. Right? That's it. There's no way this doesn't just vaporize, just like it vaporized in 2001. The question is when? Is the rest of the world looking to buy the dollar and get a 5% yield in 3-month treasuries to wait out whatever is happening? Probably. But if the dollar goes lower, Cathie bar the door, it's on in crypto. I think crypto is ahead of the game, so it could be a leading indicator. But if the dollar index doesn't drop, or conversely, if it drops off the Fed, it's on in Bitcoin. Hence the idea of keeping core long positions. Now, Solana, right, unstoppable, right? A 13 top on a 4-hour chart, no one cares, right? You go to resistance, no one cares. Okay, now, some point today, you're going to have a 9 top on a 4-hour chart. Okay, Wrong Again says, who wants 5% when inflation is going back to 10% if it's not there already? Okay. Joseph Green is here. Okay. Double AM says warmongers are in full force. Okay. California checking in with Shep Dog. Now with this, again, it's above support. If it stays, it was resistance. Now it's support. If it stays there, great. No one's going to get out of Solana, right? Because it's kind of the new ETH, and that's fine. Okay. Until you wake up one day and there's a problem, which is one of the things I'm suggesting. You have to be careful of the failed rally, and you have to be careful of the surprise overnight event that occurs when people are convinced there will be no sort of overnight event. Now let's talk about interest rates. Jim Grant is an individual who started a bond market newsletter when I was 12. That's how long Jim Grant has been around. Jim Grant, okay, back in June was talking about a generation length rise in rates. What does that mean? That means going back 150 years, there have been a succession of bond bull and bear markets, each lasting 20 years in length. So again, Powell comes out Wednesday, beware the failed rally if everyone thinks Powell being done tightening is somehow bullish. Powell being done tightening is bearish for risk assets because he sees the fear. If a bond market, if a bear market in bonds can last 20 years, I don't know that you want to follow the cover of Barron's telling you now is the time to buy bonds. You buy when the cover of Barron's is like it's all going to zero. We're obviously not there yet, so food for thought. Now, here is a redraw of the hidden pivot analysis in long bonds, which is ZB. Now, in the past, I have talked about bonds as something that risk assets like crypto can't survive. So obviously, crypto has thumbed its nose at all that and managed to go up all on its lonesome, right? And it did so in here when bonds stopped falling and rates stopped rising. However, on this chart, you have this failed rally on this redraw that happened right at this key point. And the next point on the downside is 91. And 100 is called par in bond trading. I can only imagine the hysterical headlines that you would have if long bonds actually went down and broke par or 100. Now, is this ridiculous talk? Well, 2 days ago, it might have been. And then the Treasury comes out and says we want to borrow 1.5 trillion in like a span of 3 months. Normally, that would be like the amount the Treasury would borrow in maybe a year. There's just, you know, they need money to hand out to whoever they're handing it out to. Plus, you know, our arsenal of weapons, we're not in war footing. We're not. So I don't know what they're borrowing all the money for, But all you need is one bad economic number and all these auctions to basically go bad, right? In other words, banks have to take what the government issues. This is a very important thing to understand. When the government goes, oh, we're issuing 1.5 trillion, yeah, they can force banks, or what called primary dealers, to take all those bonds. They're like, hey guys, this is your job. This is our relationship. I want to issue bonds. You take the bonds. Well, what are the banks or the sell side dealers going to do with the bonds if no one wants them? Well, they're probably going to start selling, and they may start selling as hedges in advance of that. So sitting around going, bonds can't go any lower with Uncle Sugar just trying to get all the sugar that it can, I don't know about that. And if you have a problem in bonds, you're going to have a problem in stocks. And what I don't want to happen is I don't want you to get caught in that. I don't. Right? So acknowledge the upside in Bitcoin, right? We've done that. Complete lack of credibility on governments, a fiat crisis coming, ETF buying, MicroStrategy up. That's the bull case. The case for the correction is that you have a colossal problem in legacy where people are basically clueless. No one has seen whatever is happening before. But if you draw the charts, as one person I talked to or listened to, you know, I'll show you the charts and then tell you the news. Show me the charts and I'll tell you the news. This is a complete loss of credibility by the government. Okay, here it is in TLT, a redrawn hidden pivot structure. In this case, it's a little bit more, you know, if this, then that. So you've got 84 as a key level over here in TLT. So if TLT holds 84, well, it's fine, right? It's fine. And you can carry on in crypto. People are going to carry on in crypto anyway. I just don't want you to get smoked. I want you to write some of these levels down. So TLT above 84, good. Total crypto market cap, 1.25 trillion. We'll see, right? Up, good, down, bad. Okay, but the downside target in TLT is ungodly. It's just totally ungodly. Okay, and if you had an escalation of hostilities and the government had to borrow even more money to get involved, treasuries become junk bonds. In other words, to save you having a major in economics, the interest rate on treasury bonds is considered the risk-free rate. All of finance is priced off treasuries being considered risk-free, and we know that they're not. They're not. Now, if that is demonstrated with a disorderly drop in bonds, yeah, the Fed maybe can step in and do something about that, but don't doubt it can happen. Now, Bitcoin doesn't think it can happen. It is great. That's why you're holding a core long. Right. But you want to be able to buy the dip in case something totally stupid happens. Now, gold knows something totally stupid is going to happen. Right. I mean, if there isn't Jim Grant said this is the ultimate environment for gold. The Fed is done tightening. There's a problem with risk assets. There's a problem with bonds. There's all this uncertainty. If gold takes out 2042, you know, it's going to add $200 to the price just to get to a tactical hidden pivot target. I think if Bitcoin takes out 42K, gold's going to 5,000. It's as simple as that. I mean, a bond market debacle might create a pause in gold. It might not. A persistent inflation problem with the Fed on hold is gold positive. Now, let's turn to stocks. It's very simple. Beware the failed rally. Okay. T-Bone wants to look at Riot and Mara. I will be sure to get to that in the live TA segment. Okay. Okay, my pen started working again. That's good news. Okay, let's talk about equities. This is S&P cash, SPX. So you've got a 13 bottom and a 9 bottom and support at 41.50. They took it below it, and now they're taking it back above it. That's good. Now, when you have a 9 bottom, if you have a failed rally, you could start a much bigger trend lower, to keep it simple. Now, how dangerous is a failed rally in equities? Okay, so You have a lot of good support here. You're on support and the market bounces. That's good. Hopefully it stays that way. If it does, crypto can just carry on. It can spread to XRP. It can spread everywhere. You can have the miners take off, Galaxy take off. If you don't have a problem in stocks, you don't have a problem in crypto. It's that simple. Now, what happens if this rally fails? So again, the stream's on YouTube for a week, right? And I want you guys to be prepared. There'll be updates in the Patreon group, obviously, daily. But this stream is on YouTube for a week. What happens if you get a failed rally in equities? This is what happens if you get a failed rally in equities. Here's support, S&P and 87. Good support, right? Good support. Here's a move to support, and there's your blue candle, which is your rally. And if the rally, when the rally failed back then, that was the end, right? That was the end, right? It broke down, broke, 3 days later, you had a calamity. So that's pretty simple. You don't want a failed rally in stocks and you don't want a failed rally in bonds. If there's no failed rally, then you're fine in crypto. Now, what is the probability of something like this happening? Higher than anyone thinks. Honestly, higher than anyone thinks. Why? Go back to what I said in the beginning. Portfolio managers have never seen anything like this. They've never seen they didn't see 2008, although they've watched a movie about it. And no one understands the nature of war. Everyone is calling for a ceasefire. It's started. You don't get a ceasefire in a war until like one of the parties loses or there's so many deceased people on both sides. It's so horrible that people just cannot continue. That is unfortunately the nature of war. That's why Ray Dalio says war is always worse than you think it is. This market is not priced for worse than you think it is. So it's pretty simple, right? You get a failed rally in stocks or bonds, then you have to tactically act. I always say you can't make too much of one day. That's true. But if there's an obvious failed rally going on in legacy, again, think about it. It's not a bull market in crypto until you can buy a dip and make money. Legacy may give you the dip. They may give you a big dip, particularly since no one thinks there will ever be a dip. Nvidia. Remember when everyone was like, oh, Nvidia, oh my God, it's going up forever. I'm naming my dog Nvidia. Okay, well, it's not shown on this chart, but you're pretty close to everybody who bought Nvidia on the day that Nvidia increased its market cap by 250 billion, which is like more than Ethereum is worth in total. So there was a one-day move way back when in Nvidia, a chip stock for AI, where Nvidia's market cap went up 250 billion. Okay, we're very close to washing out everybody at 390 who got long after that. So this could be distribution by smart money selling it to retail. If you look closely at the DeMark work, Nvidia hit, a resistance point at 416, and this DeMark work on a 4 means now is the time to sell Nvidia. So if Nvidia is going down plus or minus 1 or 2 days, you should see it soon. And if any stock can lead a failed rally, it would probably be Nvidia. So I'm giving you stuff to watch throughout the week. Now, the Ethereum monthly chart. Okay, so you had a decent month, but all the DeMark stuff really hasn't changed. It's not terrible. I mean, you could have 6 more down months in ETH, in theory, but nothing changed. Like, where the hell is Ethereum? Like, I understand that everybody is into Solana and Render and all the stuff that's rallying. What is going on in Ethereum? Now, maybe there's a huge catch-up rally. Maybe that's why Bitcoin dominance goes down. That would be fantastic, right? In other words, if crypto goes into a mode where we just alternate between bullish and bearish, right? Bitcoin goes up is bullish. Bitcoin sits, alts go up. Maybe that's the environment. again, which is a case to maintain core longs. I'm trying to find a place to buy a dip, right? You don't need me to tell you that crypto's going up if you're holding a core long position. You need me to define under what circumstances you would get a dip in ETH. Bull Runner is here. Welcome. Okay, oil. Folks, I'm just not going to shut up about oil. Okay, now if they take oil below 83, this is WTI cash. Okay, so there was a high in April, a high in August at 83, right? And then you break out above it, and now look at them bang on this level, right? They've been banging on this level for a month, right? It goes up, they sell it. It goes up, they sell it. It goes up, they sell it. Bang, 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 bang on 83. Now, if they take crude oil below 83, that could be go time in crypto, because they're basically, the market is telling you that there isn't going to be a wider war. But if oil holds 83 and then turns around and goes up, just a word to the wise, again, something for the notes on your desk. Oil takes off, rising oil, based on a statistical study I did at another company, or somebody did under me at another company. Higher oil is not necessarily good for Bitcoin. So if you're long Bitcoin, you want to see oil smash below 83, and then you can be like, man, I'm just leaving it. Super cycle, call me when it's making a new high. However, if oil bounces off 83, particularly after they've banged on it for a month, it could go higher. Again, going back to 1991, right? Saddam's ragtag army takes Kuwait. Oil went from 30 to 60 overnight. And then we're looking at a situation in the Middle East where you could have what they call conflagration, if I'm saying that right, where everybody just starts shooting at everybody else because Netanyahu is not backing off, right? So let's think about what could create a dip. Bonds, stocks, oil, right? If there is no dip, well, there is no dip. That's great. Okay. Now, a word from a guy named Bob Prechter. Bob Prechter, I don't know, I guess you could call him the William Gann almost of Elliott Wave. He wrote the authoritative book on how to understand Elliott Wave. I don't think he's any Gann on his accuracy, but he is a famous technical analyst. You know, his book, The Elliott Wave Theory, is probably one of the longest and best-selling books in all of finance. Now, Bob's been on various gold talk shows talking about social mood. I have talked about social disorder. And it turns out this actually could be tradable, because here's a definition of socioeconomics. It's a theory of behavior that explains how social moods influences social action. Social mood is the collective emotional state of society, shifting between optimism and pessimism. Social mood is not determined by external events, but rather internal dynamics of human association. In other words, how we get along, which right now is just social disorder, right? You have pro on one side, against on the other side. They're fighting in the streets, hundreds of thousands of people in protests. Social mood is also not rational, conscious, or reactive, but rather unconscious, non-rational, and the key word at the bottom is proactive. Now, Prechter's interpretation of this is to say, very simply, how can stocks, how can bonds, how can anything go up when you have the social mood as bad as it is? You know, in other words, no one is thinking about the risk to any risky assets because of social mood. Are people inclined to buy stocks? Are you going to have FOMO in Nvidia? Will you have people outside of crypto buying crypto? Okay, crypto's got to get above 42. Who's taking it above 42? We're all sitting begging for BlackRock to buy it. I don't know if that was ever the purpose of crypto in general. And that is the market update. Okay, let's jump into live TA because I know you want it. Okay, so we have Cosmos on the hit list. Let's get to it. Okay, so MicroStrategy. Someone wanted to look at Galaxy. Okay. You know, the thing about Galaxy, and it depends on how you draw the range. Okay. Galaxy, back when the bull market started, was in this range between 3 and 6. Okay. And Galaxy, once it exited, obviously back then, there was a breakout, a retest, and then Galaxy just smoked to the upside. Let me label this. So this is just like everything else, right? Now, Galaxy has broken out. Again, it looks kind of like XRP. Let's sort of zoom in. Okay. Galaxy broke out. Now, Galaxy broke out here and failed. If Galaxy comes back and tests, say, $6.11, it's fine. Right? In other words, if you get that kind of shallow dip, it's good. Right? It's the biggest crypto hedge fund in the world. They probably have more Bitcoin than God. I never understood why nobody wanted to buy this when crypto was doing well. Okay. Thing is, you know, you got a gap at 550 that hasn't been filled. So the net on this, okay, this looks fine, but it looked fine over here. And it's not a bull market until you can buy a dip and make money. It went straight up, but then it languished. We need to see things come up, come down, and hold. That's how you know it's good. That's how you know you should jump in. I mean, if Bitcoin goes to 42, I think based on the total history of Galaxy, and this being the bigger the base, the higher in the space, you probably have time to get in. So I don't hate it, but in order to love it, I want to see you buy a dip and make money. Okay, Riot blockchain, okay, which I don't have in my list, but let's look at it. Okay, so here's Riot. Okay, again, the only way anybody's going to get their hands on the amount of Bitcoin needed for this ETF is to buy the miners. So here was the point back in August of 2022, which is $10.42. That's the point that really has to hold, right? Because look at it. You know, you had the breakout, you had the return move, you had smoked higher, but then it comes back down. WTF, right? WTF. What is this? Everyone talks about the Bitcoin ETF. This is what people should be watching. Okay, is this terrible? No, it's not terrible, right? It's just kind of hanging out near the top end of this range. So, you know, this thing could just explode. You could just wake up one day because, you know, you could have that, right? The dollar goes down and boom, this could go up. But this is not doing what, you know, if you look at what's being said on crypto Twitter and then you look at this price action, it's not a bull market until you can buy a dip and make money. Okay, now let's get to what I know everyone cares about, which is Render and Solana. Okay, somebody mentioned Cosmos. Let's do that. Okay, and I think the theme I'm going to approach with my altcoins is there any reason to get out? Is there any reason to get out? So let's see if we can find resistance points, because that's one of the things that you want to do. Okay. So here's a point in Cosmos, and Cosmos has gotten to the 50% retracement of that down move. And it's gotten to the 38% retracement of that down move. The DeMark work looks amazing on a daily. Okay. But, you know, when you have a 9 top, okay, sometimes you get this counter trend move. Okay. And then it's supposed to take off again. So here's how I would approach Cosmos. Obviously, people are looking to take profits here with this gross doji candle. If people take profits and it doesn't go down, it's kind of like the inverse of what I've been talking about. If it doesn't go down, then you have a sign that people are looking to buy any dip. Probably the best example of that is Chainlink, right? You have a 13 top on the 4-hour chart of Chainlink, and you have this doji, you know, this thing where you shot up and people are starting to sell it. But, you know, unless it takes out 1050, you don't have to worry. When I look at this, I'm like, you've got a 13 and a 9 top on the daily chart, and you've got this, you know, blow off top line here around 1170. Chainlink, you know, they're selling Chainlink, right? Nobody wanted it down here, and everybody wants it up here. It's got a cringe factor to it, right? Now, Solana, okay, it's tough to find anything bad in Solana, to be honest with you. The only thing that would be bad in Solana is if it failed right here. You have the 9 top, the counter trend rally, and then it resumes. The only thing you don't want to see is a failure on a 4. That's what you don't want to see. Okay, I know there's a lot of confusing DeMark lines. If Solana doesn't fail and Bitcoin doesn't fail and Legacy doesn't fail, then carry on. But there, everywhere I look, there's just this theme. Just beware the failed rally. If you don't get the failed rally, please make money in crypto. Okay, render. So render smoked higher, right? Render smokes higher. And I just messed up my chart. So let's switch pages and go to render. Okay. So here's render, right? So obviously I wouldn't blame anybody if they were like, hey man, this thing's dead, right? Let's go. However, every time you've had a 9 top in render, right? So you had a 9 top here in March, you had a 9 top here in April, and you had a 9 top here, which gave you a modest decline, and you got another 9 top here. Okay, sorry, that's Gala, not render. My bad. Okay, render. Sorry. Okay, so you have a 9 top and a 13 top, and it seemed like no one cared until, you know, they started selling it. So this is like a Solana lesson, right? It basically took out everything. They got everyone sucked in, and then they're dropping it. Now, if this goes down like this and people buy it, Cathie bar the door, right? I'm showing that the best support point in render tactically is 210. That would probably be unpleasant for people. Let's look at some Fibonacci work and check it out. Because I think Fibonacci basic. Now, again, people know where these lines are. Render hits the 38% retracement. Technically, this is probably a buy level in render if it's going to go back up. So if there's no failed rally, this is the dip in render. If you can buy this dip in render and make money, it's a statement for all of altcoins. It's a statement for all altcoins. Okay, engine. Okay. Okay, so again, you know, with your basic retracement theory, one of the things about debacle markets is, particularly when you have geopolitical stuff, is like the basics work pretty good. 62% retracement of the up move in engine is at basically 25 cents. So if they puke this out down to 25 cents, okay, that can be where you want to buy it. If they take out 25 cents, what I have told you is if an altcoin takes out 62% and can't hold it, it's no good. Okay, so a 4-hour chart of Theta. So they ignored this 13 top, or they just went into a range, and here's the 13 top in theta on a 4-hour chart. Okay. The daily looks really good, but you got resistance at 72 cents. I mean, no one's going to dump this if they've been hodling it, right? But there is this idea of taking tactical trading profits. There is this idea, right? I mean, you got serious resistance on a daily chart at 72 cents that goes all the way back to where the year started in 2023. So if you break 72 cents, well, then you can pile in and buy more. This DeMark setup here is pretty good. So it's just like I said, right? This top here, this is a great example. This 13 top impacts this market and it starts to go down, then this is a failed rally in theta. If it's like this, well, maybe it just goes sideways. Beware the failed rally. Compound. Okay, so this is like, this is like the last chart. 13 top on the 4-hour chart, right? And then the question is this going to impact price? Does anyone care, right? The 38% retracement is down at 45. I don't like it. I like it when they test these levels, they go through it a little and then they come back. I don't like it when they pull up short, even though it feels like it's mega powerful. Now, resistance in compound is at 49. People holding compound, they're not going to not hold compound. They're going to wait to see if it breaks out. I don't blame you. This DeMark work is decent, but why are you buying why would you buy resistance? It's the same thing with Chainlink, right? I don't know about buying resistance. Okay. If there's no failed rally, you got time to get in if the crypto super cycle has started. If the crypto super cycle has started, okay, Tesla. Okay, no, that's not Tesla. Okay, so everyone's pretty down on Tesla stock, breaking all kinds of support points. Okay, probably don't need a professional technical analyst to know that, essentially you were probably looking at distribution up here, right? Just like you had distribution up here. Okay, you had distribution in the same points that you had it last time. This didn't do well. Again, this whole thing about the Magnificent Seven. Sorry, I'm not. I'm not buying into their magnificence. You trying to tell me that I got to worship Web 2? Okay, so QQQ. So just going off the chart, not smart ass. 13 bottom, 9 bottom. Okay, rally. Okay, if the rally fails, you have serious problems. If it doesn't fail, it's fine. You're going to know. Okay, it might take a couple days, but if it happens, it's going to happen abruptly. This is why this whole lecture on the stream, right? Like if you get a failed rally, you have to act. Okay, you have to act. Okay, let's look at what Steve J has to say. The Treasury is going to borrow $761 billion. And Steve thinks that the Fed is going to have to monetize the debt. They're going to have to borrow it from the Fed. I think what the Fed will do is help stabilize the Treasury market with yield curve control. In other words, they'll let the Treasury issue it and then buy it if it's disorderly. What comes first, Bitcoin to an all-time high or USD hyperinflation or civil unrest? This is a great comment and a great question and possibly a great way to sort of close out the stream. Okay. Social disorder is coming. I have somebody who's following the Trump meme coin. Let's put that up. I know I said the T word on the air, but Okay. People are following this. A smart guy I know is following this. Okay. Now, if Trump, I think where you have to worry about social disorder is that if they put Trump in jail or he somehow loses the election a year from now. Because right now, if you look at the polling numbers, he's in front. Now, there are a lot of reasons to buy Bitcoin. There may be more reason to buy this meme coin, especially if he's like the front runner and they can't get him in court. Social disorder, problems with the bond market, to me, feel imminent. Now, I'm going to take this off the screen and bring you back over to Bitcoin, which is another great way to end the stream, right? Because I did not bring this up. Now, when we look at Bitcoin, right, if we do so on a weekly basis, Bitcoin is very close to the 38% retracement of the bear market, 35,574. Okay. I think Bitcoin got to 35,280. So Bitcoin never really got there. So maybe Bitcoin's got one more move through it. Maybe. But I don't understand why you would buy something at resistance. Why? I don't get it. Michael, we did XRP at the beginning. Okay. XRP is breaking out kind of like Chainlink did. It's an indication that Ripple is done selling it, but it's going to require cooperation from the rest of the market. I am not necessarily keen on buying things up here. I want to take tactical trading profits and I want the market to prove itself. If this crypto market dips, right, or if it just range trades and there really is no problem in legacy, then let's go for it. But you're not going to know that for a couple of months, right? You may get a dip at Thanksgiving and a dip at Christmas, okay? But saying it's going up forever when you've got resistance here and a legacy population that's really clueless as to what's going on, it's not a bull market until you can buy a dip and make money. Okay, so that's it for the stream today. I don't think you're going to get the outro music. I definitely appreciate everybody tuning in. As Duilo is saying, please hit the like button on the way out, early, often, on your computer and your phone. That's the market update for this week. Don't forget to check out the Patreon prototype. Okay, I should probably share that on the screen. This is the Patreon prototype at $15 a month. You have a war video here, a version of the market update, and then I'm posting charts on a regular basis, almost like Twitter, except it's purely TA based. Wait, it didn't come up. Okay. So this is the Patreon, patreon.com/unhingedcrypto. That's going to be like the umbrella company. So here's a blunt version of the market update along with charts, sort of like Twitter. I'm going to be dumping videos in there. It's the prototype. If you want to check it out, now's a good time to do so. Okay, that's the market update.